Fitch's Senior Director, Paul Rawkins, joining me now. Paul, yesterday we had that bond sale go through. You know, it was taken up, 3 times oversubscribed. How important was it?
Well, it was very important that Greece could demonstrate that it had restored market access, really, and I think investors bought the story that really Greece had finally swallowed the medicine that everybody felt they should take. So in that sense, it was encouraging. I mean, there's no question about that, I think.
Now, it's all well having an austerity plan on the table, and as we've been seeing these demonstrations taking place, it makes it more difficult, however, to carry through with it.
Yeah, in a sense, although these demonstrations they're commonplace in Greece, really. I mean, on every occasion I've ever been to Greece, there's been strikes going on. But, I mean, if the strikes get to the point where it stops government working and it stops economy working, then it's a problem.
Yeah, the proof is going to be in the eating here.
Absolutely.
So what do you expect out of Germany today? I mean, they've already said 9 in effect, but where do we go?
Yeah, well, I think probably support is really the only question that's going to be on the table, really. And I suspect what Greece is going to say is that, in a sense, they've fulfilled their sense of the bargain, their part of the bargain to start with, and they're looking for greater statements of explicit support from their European partners. That I suspect is going to be the line that's going to be taken.
Paul, what about the data out of Greece as well? I mean, how much more reliable does that have to become before people also say, hang on a second, we can actually help you now, we do believe that that is the case, and this is what's going on? Yeah,
well, it's subject to much greater scrutiny now than it was, and they've got their EU partners going over it, they've got the IMF going over it, so I think there's more, certainly there's going to be more credibility attached to it than there has been in the past, which is good. And but markets will be very focused on monthly budget figures now to see whether actually all these measures that have been announced are working.
Let's also take a look at other sources of funding here. We've got Jean-Claude Trichet saying that it would be bad if they went to the IMF. Is that something they can dangle, though, as a threat to make the EU do something anyway?
I think probably the Greeks are dangling that because they're saying, you know, if clearly we've got options, you know, and if the EU can't come up with financing, then we'll have to go to the IMF, and it would be a slap in the face for the euro area, I think, if they couldn't take care of their own, in a sense. I mean, this is the first stress test the euro area has been through. If it fell at the first hurdle, then it would not look good. But in a way, the IMF would be actually be a cleaner solution because it would get around all the no bailout issues.
Let's talk about the rating now. BBB+ is what you have it at Fitch right now, with a negative outlook. Yes. What's going to have to change for that to become a positive or a neutral outlook?
We're quite a long way from that point, really. So
there's more chance of a downgrade in the pipeline than...
No, clearly the rating says that at this point because it's on negative outlook. And Greece is only just at the beginning of this funding exercise because after all, they've only done a third of what they need for this year, so we've got a long way to go. April and May are going to be very critical in terms of keeping up this funding momentum. Longer term, I think it's going to be a case of can Greece, can it stick by the measures it's already taken, but also can it put more measures in place to address these measures, to address these challenges further out, really. This is not a one-year programme, this is a multi-year programme, and Greece needs to be...
Yeah, and much pain endured as well. Paul?
Yeah, absolutely.
Thank you very much indeed. Paul Rawkins there from Fitch Ratings.